Welcome back, Freedom Builders. My name is Hans Nielsen, and today we're going to touch on a topic that is extremely important if you want to be a long-term profitable investor. We're going to look at position sizing, which is all about making sure that we are taking the same risk on every single trade we are taking. So today I am going to give you the basics on the whiteboard. We will jump into my laptop where I will show you some real life examples, and at the end of the video I'll show you how we can make this platform I use, Tradingview, automate it all for us so we don't have to think too much ourselves. Doesn't that sound nice? So if you haven't done already, please press the subscribe button and the like button and the bell notification and all that down there below the video, and let's get to it. Now let's say that you have $100,000 in your account, and we want to make sure that we don't blow our account, that we don't lose our $100,000, then we might be quite conservative and saying every time I put on a trade or an investment in stocks, I will only risk 1% of my equity. It's not that you can only put 1% of your money into one trade, but you can only risk 1%, meaning that if the stock goes against you, if the price goes down and your stop loss is hit, then you will only be losing 1%. And in this case, of course, that is $1,000. Okay, how do we do that? Well, it is quite simple actually, and I'll show you again on the laptop in a second, but let's just keep some round numbers here to make it easy for me. Let's say we have a stock that costs $100. And it has been going up for a while here, and we are buying here. Let's say that we are setting a stop loss down here at $90, meaning that if the price hits $90, we will be out. That means that if we had one stock, we would be losing $10 on that single stock. And that is the basis of it all, because if I can lose $1,000 if things goes against me, and every stock loses me $10, then the math is quite simple. We're taking $1,000, our max loss, we are dividing it with the loss per stock, which is 10, meaning that we can buy 100 stocks. That's it. It also means that if, for instance, you were to buy another stock that costed $100, but that stock was more volatile, so you had to place your stop loss down at $80. Then your max loss per stock would be $20 from 100 to 80, and you would have to say 1,000 divided by your loss per stock. That was 20. That would give you a number of stocks of 50. So the more volatile the stock is, the farther away you put your stop loss, the fewer stocks you can buy. So in the first example with the $10 loss, and in the second example with the $20 loss, we would be risking different amounts per stock, but we would be risking the exact same percentage. And that is crucial if you want to have your investing be a really professional business that you run. That is that you are not just taking random risks. You need to get this standardized so you know exactly what your risk is every time you put on an investment. Alright, let's take this in theory and put it into reality on my screen. Just give me a second. Alright, we are here at the screen, and as you can see, I have pulled up Facebook just as an example here. Now, when we're using Tradingview, there are some things that are very nice to know in here, some tools that not all investors know. For instance, here in the menu over here, we have a profit loss calculator or a measurement tool. It's not sure that your menu is looking the same as mine, but that is because we have these small arrows here, and then we can choose different tools. But right now we are choosing the long position tool here. Now, if I put that over here, you can see that we get this funny green-red area, and you can also see that it is calculating everything for us It is calculating the percentage if a certain target is reached. It is calculating how much we will lose if our stop loss is hit, and so on and so on. So let's say, for instance, that I wanted to buy Facebook right now around the $221, and I wanted to put a stop loss down here, for instance, just as an example. Then if we wanted a 1-to-1 in risk reward, meaning that we wanted a target put somewhere where we were gaining the same in profit as we were risking when we put on the trade, then I can just drag this one up. You can see the number down here in the red is going up, and when that reach 1, it means that if I were taking a Facebook trade right now with a stop loss down here at around 205, I needed to set my target at, let's say, 238 to get a risk reward ratio of 1, meaning that my risk and my target price is the same size. I could also go for a 1.5 risk to reward, like this almost. Here you can see that if that reaches my target, I have taken 1.5 times the profit as I risked originally. So this is a nice tool that we can definitely use almost every time we put on an investment. But the automation is very important here, and if we look down here at the bottom here, we can see we have this one called paper trading. If you haven't activated this, it'll say something else. I don't recall what it is, but it won't say paper trading. But just push this one, and you will get a menu coming up here. You can actually attach this to your preferred broker, and then you can make the paper trading in here appear at your broker paper trading account as well. But let's just keep it this way for now. If you want this to look as much as your own account as possible, you can see right now we have an equity saying $100,000, and that is not everybody that has that. So you can't push the little figure, the little person icon over here, and you can go into reset paper trading account here. When you do that, you can put anything in. I just let it be at $100,000, but if your account is at $5,000, you just put in $5,000, and then all the calculations will be made with the $5,000 in the calculations. All right, so let's get this one down again here. Now, to get the calculation running smoothly, we need this buy and sell panel. And if you haven't activated that already, you just right click here on the screen somewhere. You go down into settings, you choose the trading part here, and down here you can see we have show buy and sell panel. If you look at my buy and sell panel here, it will disappear if I uncheck this box. So we want it there, and this is how you get it in there. Now we are ready to take on a Facebook investment, but we want to get the position sizing right. So I push buy, and you can see a new panel coming over here. Right now it says quantity of 1, because it is just the default settings. But we need to put in a stop loss here. And as you can see, our stop loss before was, let's just say, at 206 to get it some odd number. So we are putting in price here, 206. And you can see right away that it tells us that if we buy just one stock, I will be risking 0.02% of my $100,000. But that's not how I want to do it. I want to risk 1% of my entire equity. So I'm putting in 1 here, and immediately it tells me that I can buy 65 stocks. And if I buy 65 stocks with a stop loss down here at 206, I will be risking $995.8, and that is just about 1% of the $100,000. Maybe I'm a bit more of a risk taker, so I want to risk 3%. Here you can see right away I can buy 195 stocks then. It could also be that I wanted to risk 1%, but I would have my stop further up. let's say I wanted to have my stop loss at 214. I just punch in 214 and I can buy 136 stock. So as you can see, the further away you put your stop loss, if we put it down at 200, we would be able to buy fewer stocks. Here, 46 stocks, because we were risking a larger amount per stock, and we have our $1,000 in max risk divided by the max loss per stock. Per stock, yes. All right, so this is basically it. We can have TradingView doing all the work for us, telling us exactly how many stocks we can buy. And I know these are a bit of odd numbers, and maybe we could round this up and say I want to buy 50 because that's such a nice number. Is that acceptable? Well, that means that I'm taking on 1.07% of my entire equity and risk. Is that acceptable? And we can decide that for ourselves. So the important thing here is that we need to know exactly how much risk we take per trade, and it needs to be the same risk in every single trade we take. I will make another video soon about how to set stop losses, because there are a number of different ways to set stop losses, and some people just choose not to set a stop loss anyway. But without a stop loss, without a certain number where you need to get out of the stock, you cannot calculate your risk size, and that makes it a bit more muddy how much you risk on each and every trade. So I hope this made sense. If there are questions, if there's something you need to get explained further, just write below the video and I'll make sure to get back to you as quickly as possible. If you haven't done already, remember, subscribe to the channel, hit the bell notification and the like button and all that down there. And I will put links to TradingView and several other things beneath, also to my playlist where I have my other TradingView videos. That's all for now. I'm looking forward to getting back to you as quickly as possible with more educational material. Take good care of your money out there. I'll talk to you soon. Bye for now.